As a trade war roils the global economy, even dividend champions face industrial-sized risk. With earnings on the rise, is this company still navigating rough terrain? Or is Caterpillar a keystone in constructing your portfolio?
On a day where the S&P 500 roared to a new all-time high, can we talk about one of my favorite companies on earth? Can we talk about Caterpillar? Last year, Cat was written off wrongly, I might add, as a company with too much China exposure to withstand the trade war. Never mind that they only get 5 to 10% of their sales from the People's Republic. Management just raised the dividend by 20% just last month, bringing the yield up to 3.1%. Never mind that they raised their full-year earnings forecast back in April. Cat stock couldn't catch a break. That is until the past few weeks. Lately, this thing has been flying in anticipation of a rate cut, maybe a possible trade deal with China. And you know what? I think it's worth owning even without a deal, because this is not your father's Caterpillar. But don't take it from me. We have a special treat tonight. Let's check in with Jim Umpleby. He's the chairman and CEO of Caterpillar to get a better sense of how this very misunderstood company is doing and where it is headed. Mr. Umpleby, welcome to Mad Money. Good to see you, Jim. Have a seat. Thank you. Thank you. For most of my life, I always heard Caterpillar was boom bust. You've come in. I now think of Caterpillar as a profitable growth for all company, not chasing growth, not concentrating just on profits, but a sustainable way to increase shareholder value. You've changed this Caterpillar, and I think people need to know that the perception is way too far behind what you're doing.
Well, thanks, Jim. It's great to be here. You know, in 2017, we introduced a new strategy for profitable growth, and we're a much stronger company today, higher operating margins, stronger free cash flow, and the ability to perform at a higher level throughout the cycle.
Well, what I think is really important here is that a lot of people are focused on world trade when Secretary Mnuchin says something negative, or when we see someone come on and we're worried about China. People sell Caterpillar. I say they should buy it, Jim, because I look at a mosaic that has more to do with services, more to do with long-term growth, more to do with machine learning, with autonomous driving, than I think has to do with orders from China. Am I too rosy?
Well, Jim, we agree. We've navigated trade tensions in our 94-year history. This is not new for us. Right. But again, we're really operating the company in a different way. We introduced, again, that new enterprise strategy, right. and we set some targets out for ourselves in our 2017 Investor Day about improving operating margins, and pleased to say that the Caterpillar team achieved or exceeded those margins last year. Just to put it in perspective, right. In 2014, we were $55 billion in sales, and again in 2018, we were back to $55 billion in sales. The Caterpillar team improved operating margin from 11% in 2014 to 16% in 2018 in just 4 years. Last year, we achieved record earnings per share at that $55 billion sales level that was 17% below what we had in 2012 at $66 billion. So again, I couldn't be more proud of the Caterpillar team and this 100,000 men and women around the world dedicated to their customer success.
Well, what I like about it, you're also used to try to be in everything, all things for everybody. Now it seems like you're into what is profitable, so that you won't necessarily try to do things that don't make money. And one of the reasons why I think you're like that is you seem to be more committed to shareholders than any single person from Caterpillar I've ever met.
Well, thank you, Jim. You know, as you mentioned earlier, we did raise our dividend by 20%. That'll be effective in the third quarter. We also announced our intention to raise the dividend by at least high single digits for the next 4 years. We're also going to be more consistent in share repurchases. And we've said that we will return essentially all free cash flow to shareholders through a combination of dividends and share repurchases. And again, still have a very healthy balance sheet for any inorganic opportunities that come our way.
Well, I think one other thing that I was so afraid that what you were going to do was that you were going to cut R&D. You did the opposite, because clearly you were talking about long-term sustainability, not just offering a better product now, but a future product of Caterpillar that we never thought could happen.
Yeah, that is very important. We've invested about $3.5 billion in the last 2 years in R&D. We take a long-term view. Right. We know there will be cycles. We know there'll be trade tensions. But again, we're in this for the long haul. And with our new strategy, we've gotten much more granular in understanding by product, by market, by application, where we're creating shareholder value and where we're not. And we're allocating our resources to those areas that do represent the best best areas for future profitable growth in the medium and long term.
Well, I mean, I've always felt that you have a Caterpillar machine. It should bring all these other services with it, but no one ever talked about it. I've had Caterpillar people go out to dinner with them. They never talked about the 2 million active assets in the field and what that means and the service revenue that comes from that, which trumps by far anything that might happen with the China trades.
It is a major element of our new strategy. One of the things we did at our recent Investor Day in May is we announced our intent to double our services revenue from $14 billion, which is what we had in 2016 before we launched our new strategy, to 2018, double it in 10 years. And one of the things we've been doing is investing quite heavily in our digital capabilities.
Right.
We now have 850,000 connected machines and engines around the world, which is 70% more than we had when we started our strategy in the beginning of 2017. We're going for 1 million connected assets by the end of the year. And services is the way that everything that we do with a customer after we sell a new piece of equipment. And we're working closely with our dealers to find more ways to add customer value through services.
One of the ways you like, I mean, look, I'm not shilling for Cat. I have been a critic of Cat. Everyone knows that I used to feel like, are they going to cut the dividend? They're backing away from the buyback. Now they're in the buyback. Now they're talking about the high water mark. Then the loan. You made it tough. You don't make it tough because you're not thinking about 2019. And one of the things you're thinking about the 10-year picture. One of the things I know that why you're not doing that is, I always think, okay, who's doing autonomous driving? And everyone's always talking about it. Well, maybe Domino's or maybe Waymo. Or the only autonomous driving that's actually in play right now is Caterpillar.
Yeah, it's a very exciting story. Again, it's back to that long-term R&D. Right. So my predecessors invested heavily in this. We're continuing to. Most people don't realize that Caterpillar has the largest autonomous fleet. It's mining trucks. Twice as many actual miles driven autonomously than any car manufacturer. So we have 7 different customers, 11 different sites around the world, hundreds of mining trucks and other equipment as well in true autonomous operations.
No, but it does not mean there's been other times where I've seen Caterpillar spend like it had Apple, like it had a balance sheet that it could spend $100 billion. You don't do that anymore. You don't do crazy CapEx. You know that there were times when you're putting up plants, then you're shutting down plants. That's done too.
Well, we're laser focused on ensuring that we get a return on our investments. Right. We know we'll have cycles, and we are committed to have a flexible and competitive cost structure. And we're going to deal with whatever the market brings to us. Again, whether it's issues, challenges created through trade tensions, economic cycles, we're committed to perform at a higher level.
Okay, so the president says it's going to be an additional $300 billion. They're going to put 25% on. Are people going to sell your stock? Will that make sense?
It really doesn't. I mean, in terms of, we've publicly stated that we expect tariffs to be between 250 and 350 million this year. We're very comfortable still meeting our forecast, dealing with those challenges. So again, it's part of what we do. We've seen this before. We've been through it. We'll manage our way through this.
Is oil being up 5% more important than China?
Actually, oil and gas business is very important.
Talk about that. Yeah. It's really huge.
Well, I watch your show, and I know that you've had a lot of CEOs talk about the Permian and what's going on in oil and gas. A lot of people don't realize that Caterpillar plays across a wide portion of that oil and gas value chain. Of course, our machines are used to prepare the sites and to lay the pipelines, but our reciprocating engines are used for drilling, for oil and gas drilling. When it comes to well servicing, we think the best well servicing trailer has a Caterpillar engine, a Caterpillar transmission, and a Black Horse pump that we manufacture through our joint venture with Aerial Corporation. 2016, we bought a company called Kemper, which manufactures the flow iron around the trailer. Our reciprocating engines are used to drive reciprocating compressors for gas gathering near the wellhead. Then our larger solar gas turbines driving solar centrifugal natural gas compressors compress gas along those big interstate pipelines. So again, we're a big part of that Permian story, and we're very proud to be.
Well, so if Mike Wirth, whom you know, is the fabulous CEO of Chevron, says that there could be 10,000 wells drilled right now in the Permian, the better way to play that is to play Caterpillar.
Well, again, Chevron is a great company. Of course, as you know, I'm on the board.
Yeah.
But we are very committed to be part of that success and very excited about it as well.
So how do you get the Wall Street to understand? Because at your fabulous analyst day, and I would urge everyone who's going to buy even one share, it is so clear where the company is and explains the services. They seem so, how do you get them off the fixation of what's going to be the next thing that happens from Xi and from China?
What I tell our team is just meet our commitments. We have a clearly defined strategy, take care of our customers, meet our commitments, and everything will take care of itself. You stop and think about services and the value that brings to customers. It does things like increase machine availability, minimize downtime, helps our customers manage owning and operating costs, and what's really important is asset utilization. You stop and think about our industry, typically, asset utilization is very low. If we can increase that just a bit, very positive for our customers and for CAT as well.
How did you cut out 29% of manufacturing space and still make more money?
Well, lean manufacturing. So we've been applying lean principles in our factory. It's a never-ending journey. It's going to go on forever. But again, we're very focused on understanding there will be cycles, and we do our very best to get as much as we can out of a fixed amount of brick and mortar. I'd rather invest that money in new services than bricks and mortar in factories.
Okay, well then tell me about the cycles, because Draghi just said that Europe is weak. We know Latin America can be weak. China seems a little bit weaker. It is unbelievable to me that you're making this amount of money. There would be another time when I would have expected Caterpillar to lose money right now. What's in the world is happening that's good so that we can see what could happen in the future?
You know, just going around the world, I mean, certainly in North America, it's still strong for us. A lot of that's being driven by construction. There's local and state governments investing in infrastructure, even though we don't have a national infrastructure bill. People always ask about China, as you mentioned. Right. Again, 5 to 10% of our sales. China's still strong for us. Most of the Chinese market for us is hydraulic excavators, 10 and above, and that business continues to be strong. We saw a big increase there in 2017, 2018, and it's continuing into 2019 so far. Europe's about flat. Latin America is starting to improve from a very low base.
Okay.
But for us, it really makes more sense to look at it from an industry view, because we sell to customers that produce commodities that go into the global commodities market as opposed to just a local economy. So think about mining for a minute. As you know, we had some very tough years in mining.
Yes.
Mining started to improve in 2017, improved more in 2018. First quarter 2019, our resource industries segment had a very good quarter. It's slowly improving, but we are still well below what we would consider normal mining activity. And honestly, kind of a slow, steady ramp up for me is better for everybody than some of the volatility we've seen over the last few years.
Right. Last question. What's it like to be the steward of really a great American icon?
It's a great honor. It's a great responsibility. You know, I have some sleepless nights thinking about the legacy. You know, we all stand on the shoulders of our predecessors. 100,000 employees around the world, all of our great dealers, which give a tremendous competitive advantage, our dealer employees. It's just a great honor.
Well, now people at home, people here to understand why I think the Caterpillar is just one unbelievable bargain, long-term investment right here, right now. That's Jim Umpleby. He's chairman and CEO of Caterpillar. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.